We are pleased to welcome back onto the 966 Mr. Amjad Ahmed, venture capitalist and seasoned investment professional with extensive experience in VC and private equity in emerging markets. Amjad is also chairman and founding director of the Empower ME initiative at the Atlantic Council, a program which empowers entrepreneurs, women, and the private sector in the region, and which oversees, in collaboration with Georgetown University, the WIN Fellowship, a fully sponsored year-long program for female entrepreneurs in the region. Amjad also sits on the board of directors for several companies in the U.S. and across the region. Welcome back, Amjad. Nice to see you again.
Good to see you. Thanks, Shane.
And wonderful to have you back. I have to share with you, Amjad, when you were with us April 2022, we launched this show in October 2021. We sort of went to weekly not long before we had you on. And I remember Lucian was here in DC. I was in New York at a NEOM event. And that episode, it was the first sort of indication to me that we had something, because the response was outstanding. And as I said, we were ironing out our format. We had recently gone to weekly, and the response was outstanding. And I can remember going, "Wow, this is a topic everyone likes about. This was a great guest. Let's see if we can keep doing this." But anyway, so you gave at least me tremendous hope very early on.
Well, that's great to hear, but it was all you, Richard. I listened to the program and it's excellent. So job well done.
That's wonderful, wonderful. And we want to talk about the VC and investment in the region and specifically in Saudi Arabia. But before we do that, we have to get let's give you some space to talk about your Empower ME program that you're doing. An extraordinary initiative. It's especially important to us as it happens. Just recently, we had Omar Sheikh, CEO of MENA for PepsiCo on. They're very much involved. We had Dana Al-Ajlani, who is the co-chairman of the Women in Business for AmCham KSA, as well as, a businesswoman in her own right, very successful businesswoman. So these are all people who you have drawn, you've networked, and you're sort of at the very, center of the spider web, as it were, of this tremendous initiative. Can you tell us a little bit about it?
Yeah, thanks for that. This is an initiative that's near and dear to my heart. We started it roughly 3 years ago. And what I really wanted to do is create these bridges between this great country, the US, that gave me so much, and the region where, I come from, and my heritage and my parents come from. And to do it in, let's say, a more positive way. Unfortunately, we only hear about lots of negativity about the Middle East, especially, on this side of the pond. And I wanted to bring a new narrative to that discussion. We talk a lot about politics, we talk a lot about security, we talk a lot about energy, but I felt like there was this huge gap of great things that were happening and people that were doing such phenomenal work that was missing. I've been investing in the region for 2 decades. I saw the power of what can happen when you invest and you give opportunities to entrepreneurs to create wealth and jobs, and it's replicable and it can be done. So the initiative focuses on empowering the private sector. And what we try to do is say, look, here are the things that are working. How can we multiply them? How can we do more of this? Here's some sort of general guidelines and advice on policy about, policy that can actually move the needle in this area. And we focus on, the 3 groups. We focus on entrepreneurs as a body. We focus on women, because women in the region are very educated, but they just are not given the opportunities. Their participation rate is rather low. So can they get more opportunities? And that in itself can create phenomenal GDP growth, right? You're igniting part of the population that's been underutilized. And then last but not least is the private sector in general. What, sectors, how can you drive more business? And it just happens that during the time of launching this initiative, the region sort of had this awakening that, hey, we don't want to fund jobs anymore. The government cannot take on more of this creation of jobs. We need another engine. And what better engine than entrepreneurship? So how can we drive more of that? So in a way, we got lucky that the initiative aligned with things that were happening in the region at the time. Um, the most successful program that's come out of the Empower Middle East program has been what we call the WIN Fellowship, or Women Innovators Fellowship. And it's been tremendous. Last year we started with Saudi only, 33 women, highly selective program. They go through a 1-year training, sort of mini MBA with Georgetown University. During that process, we hold workshops on policy issues that they care about to get their voices heard. We highlight them. And the culmination of that is the top graduates get to come to the US for a roadshow where US policymakers, US investors, US companies can hear from them directly, rather than reading in the paper about what's happening in the region. And I can't tell you, that trip was such a tremendous opportunity. I was overwhelmed by the response on both sides. The women themselves loved the opportunity of meeting all these phenomenal people, but then to see the reactions on the other side, and you saw barriers just coming down. So it was phenomenal. This year, we've expanded it to the UAE and Bahrain. So now we have 86 women altogether. Next year, we're hoping to add 2 more countries to make it 5. And of course, every year we're doing the same program in the existing countries. So you can see that the snowball effect of this is fairly dramatic. And what our vision is that 10 years from now, you have a WIN Fellowship alumni that's leading companies, having their own businesses, and really a pool of great human resource that we can all tap into that are doing phenomenal things. That's the ultimate vision.
When we were communicating prior to this episode, I had mentioned that it seemed like the program had really taken off. I had no idea. That's amazing. I mean, you're well on your way to creating a really extensive network.
I have to say that was sort of the vision, right? Is that you can't, we didn't want these programs to be, you see a lot of these programs, they're in one and out, right? They happen, it's kind of like a factory, and then they disappear. We said, no, the power of this is creating that pool of candidates, really upskilling them during that year, but then having them hold on to this as they go forward. So the alumni network for us is a really powerful side of this. And honestly, we couldn't do this without sponsors, right? And people, some of the people you mentioned, like Pepsi has been, I have to say, phenomenal. They support us in year 1. Year 2 is easy. They said, we're in again. And we hope, they stay with this program for as long as it survives. The U.S. Embassies around the region have been the cornerstone, funder, and they've been phenomenal. They really enjoy the program. The ambassadors are very engaged. Martina Strong, who is now the UAE, the U.S. ambassador,
you can follow her
to the UAE. Look, honestly, I see her as a co-founder. She was so supportive in the Saudi program when she was the Chargé d'Affaires there, and she was phenomenal. I mean, she really took this under her wing. She was super supportive, and now she goes to the UAE. We already have a program there. She's definitely gonna be involved with our fellows. And I actually just saw a video today of her. She actually met one of the fellows at her welcome party, and she took a picture and she put it out there. So it's exciting, and we're hoping this goes to other Arab countries because I think one thing that we recognize is that connectivity between women as well across the countries. It's tremendous. I mean, I can't tell you in the background what's been happening has really given me a lot of joy. Just to see people talking, people helping each other out with opportunities, investors, whatever it is, network, and then people flying to each other's countries to come to these workshops. I mean, it's been quite interesting, and I hope you get to meet some of them when they come and do the roadshow next year. So the program, the second year ends in May. And we're hoping to have the roadshow at that time, and we'll have approximately 18 to 20 women from the UAE, Bahrain, and Saudi here in Washington during that time. So it'll be a few exciting events. So I'll make sure you're added to that.
Well,
Awesome.
we'd love to, and we'd love to have him on the 966. And Lucian, you were saying before we started recording that Amjad is basically a celebrity.
You're like a celebrity. Yeah, you're like a celebrity, especially in the VC ecosystem over there for sure.
I'm gonna have both of you do a private Zoom with my daughters, so they can hear this. I'll tell you guys a quick funny story. So I think you saw the article I recently wrote for the IMF, the Finance and Development magazine. So I showed it to my daughters, and they said, "Oh, what's this?" I said, "This is kind of like the Vogue for finance."
Oh, cool.
That's when they said, "Oh, that's cool." I was like, "Okay, good." So I tried to draw a parallel. So Richard, what I'll tell them about this episode is that you're the Taylor Swift of the podcast.
Can I be Travis Kelce in that situation? I want to be on the field.
I'm not sure I want to date you, even fake it. Well, that's wonderful, and again, congrats, Amjad. I'm glad we had a chance to spend some time on that program because it's really valuable.
By the way, I can't take all the credit. I have such a great team of ladies that I work with. Lynn and Nebras from the Atlantic Council, hugely amazing team. And to see all that we can do just as a small group, it's really thanks to their hard work.
Yes. Let's turn to investment. You're one of your many hats, and I know Lucian spent a lot of time in this space, but I'd like to start with the big picture. And
Sure.
and I know you look at MENA, but we want to look at MENA and KSA as well. But and as you know, it had a roaring in terms of VC activity, had a roaring 2022.
Right.
First half of 2023 has been much slower. Can you sort of give us an overview of what the VC ecosystem looks like right now in the region, and specifically Saudi Arabia?
Sure. So on a macro level, I think you've seen a lot of the data. What we've seen is that venture investing generally has slowed down, and this is globally, right? And specifically, I would say growth part has really, I would say, collapsed. And the reason being is I think you saw just tremendous valuations during 2020 and 2021. And late stage investors were really hurt by this because those valuations did not hold up once the world shifted. And I think there was an underestimation of the sensitivity of venture to the macro environment, to interest rates. We lived in a world of low interest rates for a very long time. I mean, since 2008, really. And a lot of venture investing really accelerated during that period because you had cheap money. Frankly, there was nowhere to put your money to get a return. So people started going riskier and riskier on the asset class scale. And venture is one of the riskiest, right? So you had a lot of money come in when interest rates were nothing. The minute interest rates started accelerating, and this has been the steepest rise in interest rates in our history, investors just recalibrated what they were investing in. They said, well, I don't need to go risky anymore. I'm getting 5% in treasury. You put your money in a savings account today in the US, you're getting 4.5%, 5%. That's pretty good, right? When you used to earn zero. So that shift kind of sucked the capital out of venture capital. And the region was not immune to this, right? Because regional investors are global investors. I mean, someone sitting in Saudi Arabia, a family office in Saudi Arabia is exposed to the globe, right? They have equities, they have debt, they have private equity. So they were also affected. So you saw a pullback by investors locally. And, you definitely saw a pullback by international investors who were playing in our markets, right? And it's what I call the hot money, right? Hot money goes into emerging markets when interest rates are low, and they step out when interest rates are high, right? Because emerging markets are a riskier investment. So the cost of capital, when it rises, the money comes out, and that's what's happened. So we are seeing a pullback by international investors in the local market. The local investors are there; they're staying steady, but again, they've also reallocated. They're not as aggressive as they once were. I would say the most stable investors in the region today are the sovereign wealth funds, and they're the most stable for a great reason, which is for them, this is not a 1 year, 2 year story. It's what I would call a transformation in their economy, right? They're looking for diversification, and they've been some of the best supporters of the ecosystem locally. But in the end, we need private investors. We need more private investors in the local market. We need private investors from international to come into our markets. Until that happens, I think you'll see this dramatic volatility on an ongoing basis.
And would you anticipate the activity, not only in terms of numbers of deals, but total value of deals, would sort of bump along until interest rates moderate?
Look,
or can it sort of regenerate even in this environment?
Sure. So look, I think this is where I see a divergence between a market like the US and the markets in the Middle East. For the markets of the Middle East, this is, I hate to be dramatic here, but it's fatal because the ecosystem is still nascent, right? We were still at the early stages, and we started seeing all this exciting momentum, and it just took the air out at this stage, right? The US has seen these ups and downs, and it'll come back, right? The US is a robust market. The investor base here is dramatically wide, sophisticated investors. It's going to come back. And Instacart was a great example. Once we digest that, valuations are normalized now. They're no longer the 2020 and 2021. People will come back into the market, right? For MENA, it's too early. We need that momentum to continue, and it concerns me. It concerns me now that we've had a lot of seed funding happen over the last couple of years. We've had a lot of A rounds, but honestly, raising money today is really challenging. And these companies need fuel to continue to grow, and the ecosystem needs the fuel to continue to grow. And I think the sovereigns plugging this gap is just not going to be enough. There's only so much that they can do. They're supporting new funds. They're trying to entice new investors in, but we need private capital. And I think this is where I would maybe tweak the model a bit, because I think they need to entice LPs. They're trying to build GPs today. So they're trying to build new funds to operate in the market, but somehow we need to attract someone sitting in New York to say, come and invest in a fund in Saudi, right? As an LP. And I just don't see that happening today. And the question is, well, what kind of incentivization should we give that investor? Is it, we'll take the hit on the first loss, or, we'll guarantee some kind of minimum return? I don't know, but I think there needs to be some enticement for LPs to come and start investing in regional funds.
Well, so that's a good segue into the piece that you wrote for the Vogue of international investing, the IMF blog, which we recommend this. This is just actually publication date this month, September 2023. Really, really excellent piece that Amjad did for the IMF Finance and Development blog, outlining essentially the potential for the fintech sector rather.
Yes.
But, asking, is there a better way to regulate this to help unleash this potential? And I'm gathering this is what you're alluding to.
Yeah, I think when you come to fintech, just as a sector, there are a lot of interesting dynamics, right? I mean, I think we're in a region that is, in depending on which country you're looking at, is underbanked. We have some countries with very stodgy, semi-governmental, very centralized powerhouse banks that might not need to operate as competitively and as efficiently as you would in an open market, which causes fees to be a bit higher and services not to be great. So to bring on competition, you need to open up the market a bit, and what better competition than technology and going digital to create more inclusion across the board, right? But if not everyone is playing on the same level playing field, then it doesn't work. So to me, that's number one, is you need regulation that says, look, we don't care whether you're a local bank, a new fintech company, or an international bank. This is what you need to do to operate in this market, right? And create a level playing field that's open and affordable for new upstarts to come in and compete. No one is saying to give them an advantage, but have a level playing field. I think two is, and this is not fintech specific, this is really region specific. One of the primary issues why you don't see LPs running to invest in MENA funds is that jumping from Saudi Arabia as a business, which is a great market, it's a big market, but at the end of the day, it's in the context of the world, it's not a huge market. It's not the US and China and India. So people have to go regional, right? So, but for a startup to jump from Saudi Arabia to Egypt, it's literally like starting a brand new company, right? With costs, with time, with effort, with people. I mean, it's not as simple as going from New York to California. And until the region, I think, becomes, a little bit more integrated. And I think the best way to do that is to have some kind of regulatory harmonization to say, look, regulator, let's talk. Would you guys accept, a startup that is licensed by us to operate in your market, or at least go through a slimmed down version of getting a license? How can we all work together, right? And this is not a zero-sum game, right? Everyone is going to gain. That startup is going to go to that other country and create jobs and opportunities and so on and so forth. And it's going to help its home country where it's headquartered. So, but I think there's too much zero-sum game thinking. Like, if I let these guys come in, then it hurts my companies and so on and so forth. I think human capital is a serious issue, especially in fintech. Fintech, I think the mistake that VCs made and also startups made in fintech is that, hey, this is just like retail. We can launch a company and make a lot of money. Fintech is more complicated. It's a highly regulated sector. You're dealing with money. If you want to build a true fintech company, you do need some subject matter expertise. And I think the more it scales, the more that expertise is needed. So specifically in this sector, I think the talent gap is even more significant. I mean, we have a talent gap, period, but I think it's more significant in financial services. But the opportunity is tremendous. There's so much opportunity for fee capture. And McKinsey did a great report about the fee pool in the region. I mean, it's massive, the fee pool from banking. And the penetration of fintech is minute. I mean, it's maybe a couple of 100 basis points. So it has a long way to go.
Well, it's always interesting because we cover Saudi Arabia specifically. We look at the region as well, but the Gulf states, certainly UAE and Saudi and others, are moving at a little different pace.
Right.
So, there's some feel good stories about, digitization and penetration of digital banking and that sort of thing. But you note in your IMF blog that only 17% of consumers in the Middle East actually use digital banking. So, it's hard to keep track. Sometimes we get all excited about this progress here. They're hitting metrics here in terms of Vision 2030, but in the larger region, which impacts the whole ecosystem, it's not the same story. And that's interesting, your point that, if they can sort of formalize a more integrated regulatory environment, you could get this synergies.
Look, you really can. Look, at the end of the day, by the way, you mentioned the 17 number. Keep in mind that this is a region that has very high mobile penetration rates. So this is not a region where people don't have mobiles. They do have mobiles and they do have smartphones. So the smartphone penetration is fairly high. So that's even, that statistic becomes even more glaring, that only 17% are using banking products. I think the integration piece of this is such a crucial piece, and the IMF has done a lot of great writing on this, and McKinsey and others. So I won't hash it out, but it's a critical issue. I think if it's easy to say we want scalable startups, but it's much harder to execute on that when it's so difficult to go from one country to the other. And look, again, we're talking generality here. Some of them are bringing barriers down, but I can tell you it's still challenging and costly, which again, this is all connected, right? It goes back to the investors. If I'm an investor and I say, well, I can invest in China, India, US, why would I go and put my money in such a difficult, challenging environment where, making the same return might be really, really tough, right?
And you don't even know the market either. It's like you're on the outside
right.
looking in. Yeah. So
right. And the sad thing is the potential is tremendous. Like,
sure.
The potential is great because the beautiful thing about the Middle East is that there, not only do you have digitization happening, but you have sectors that have been so underdeveloped for a lot of reasons, right? We had a lot of sort of, elites capturing different sectors. You didn't really have competition, so on and so forth. Very closed economies, and now they're opening. And some of these countries are not poor countries, right? I mean, you said you cover Saudi. Show me another time in history that a middle income per capita country has opened up like this. This is not Singapore that was poor becoming rich. This is a country that already had a pretty decent per capita income, but through its own policies and regulatory environment and other things was sort of keeping itself down, right? Or, so sort of suppressing its own potential. And then it opened up. I mean,
we kick ourselves, pinch ourselves. I don't know. What do we do, Lucian? Because we've been interested in Saudi for a long time, but to be interested and involved in doing a program like this at this juncture in history is extraordinary because this really is a unique story.
Very, very. And so sorry to deviate, but I wanted to highlight that potential. It's a different story to say, well, don't invest because there's no potential. The thing is, there is potential, but there are these hurdles and challenges that we really do need to think about, and they're all interconnected, which makes it more complicated, but they are interconnected.
Let's talk about this current situation and the downturn in VC investment in general. As you know, the preponderance of investment has been towards fintech and e-commerce. Do you see an evolution? Do you see the field sort of opening up a little bit for other sectors? Can you make money in other sectors? Is there entrepreneurs? Are there reasons to be in other sectors in addition to fintech and e-commerce?
Look, it's a great question. I think fintech is still commanding good attention, and deservedly so. I would say it's reduced, of course, because I think what you saw, as I mentioned earlier, I think the word fintech, we have to be careful, right? Some companies that came out of the fintech boom were what I call fintech light. They were really customer acquisition vehicles for banks rather than true innovators, people who were innovating the space. So what you saw was someone who was just really good at spending money and grabbing consumers, but in the back was a bank who was really making all the money, right? So so today that's shifted. I think the business models that are coming up now are true innovation, people really doing interesting work. But it's challenging, right? When the cost of capital goes up and you can't find cheap funding as a fintech company, it becomes challenging because some of them, the underlying product is the capital itself, right? And if you're not able to get competitive funding, then it becomes very difficult to sell your product. I think food has been a huge bright spot in our region, right? And you saw a lot of great M&A deals happen in the food space. And actually, when you look at the unit economics on food and food delivery in the region, they're pretty robust. People make quite a bit of money because the cost structure in the region is interesting in terms of delivery. People eat a lot. We get a lot delivered. It's been an interesting space. I think e-commerce also has been interesting. People have made money in e-commerce. And you're sort of having people started to relook at that sector again, and say, well, we might not do the Amazon of the Middle East. That's been done. But maybe there are certain verticals that are doing great, right? Think of eyewear, for example. I was involved with an eyewear company that, it's tremendous. They're doing phenomenal, great revenue. It's called Iowa, a very successful company that was able to build a multi-channel platform. People doing furniture. I'm involved in this other company called HomeSmart. They're the Wayfair of the region. So now people are really looking at sort of saying, well, okay, maybe there are certain verticals within e-commerce that make sense that I want to look at. Some of the lagging sectors have been that, are getting a second look now are things like healthcare, other sectors like enterprise software. Now people are saying, well, okay, the large companies have digitized, but all this long tail of smaller companies, they need to be digitized. So can we create software for them? Whether it's HR software, whether it's financial software. So you're seeing a lot of enterprise, and that's natural, right? Most of these markets, as they develop, the consumer goes first. You see a lot of innovation for consumers, and then later on, you start seeing innovation for businesses. It's a harder startup to create, but in a lot of ways, it could be more sticky and more lucrative. So now we're seeing some of that take hold in the market. So, and I think that's what you'll see. You'll see different pockets of investment now into different business models, different sectors that are very sort of focused on the region, and that makes sense for the region. And companies that can go regional, I think that's key.
Fascinating. And you mentioned earlier the vacuum, the void, can't fully be filled by the sovereign wealth funds. Yet the PIF is extraordinarily active.
Absolutely.
What's their role in the investment? Because it really does seem, and again, we follow Saudi every day. It really seems like another fund is set up. They just did one that's going to be handled through CAUS. There's so many.
Right.
Is it? I'm sure it's a positive role. Can you speak a little to the role of PIF in the sector?
Sure. So right now, I would say that the PIF and other Saudi sort of pockets of sovereign capital have been probably the most positive influence on the ecosystem from a capital point of view to date. They came in with programs that were serious, that were large. They wrote substantial checks to local VC funds. And what was so great about the approach was it wasn't, oh, you can only invest in Saudi. It was, you have to invest in Saudi, but you can invest in the rest of the region. So it was very pragmatic, I thought. They wanted you to invest in their local market, but they opened up the fund to say, look, we understand that these funds need to be regional to be viable. So we're okay with that. So actually, they've been very positive, right? Now PIF has a huge portfolio. VC is frankly only a small part of it. They're doing, much bigger and global deals. I mean, I want to put this into perspective. What all of these governments are spending locally is a drop in the bucket compared to their investment globally. But it's been a positive influence. I mean, they're putting in serious money into these VC funds, but at the end of the day, they can't take 100% of each fund, right? They need to take 10, 20% and then go ahead and raise the rest. But from an ecosystem point of view, they've been hugely positive, right? They've done their role. I think the missing piece is not backing GPs again. I think it's how do I, and this has been done in other parts of the world, how do I go to that family office or that asset manager sitting in New York and say, look, I know we're not there yet as a region, and I know that it doesn't look as attractive from a risk reward profile as maybe India and China, but what if I gave you a little sweetener to invest? What if I said for every dollar you invest, I'm going to put in another dollar and I'll take the first loss, as an example, right? Or I'll lend you cheap money to invest in the fund at 3%. You know what I mean? I mean, there are mechanisms. There are mechanisms that one can do. So I think that's the missing piece. But in terms of their role, it's been positive. I think the UAE has also been positive. Qatar is working on something. So there are pockets that are really doing that and trying to invest into these local markets. I think even Egypt has a program for its local VCs. So I think governments, for the most part, have done quite a bit. It's a question of, well, who's going to now fill the rest of the gap? And I think what they were hoping was that local investors would follow their lead and come in a big way, right? And that just hasn't happened to the degree that I think they thought. And there are a lot of reasons for that, right? A lot of these family offices think very much the way the governments do, which is, I make my money here. I'm already exposed here. I want to take my surplus out and invest in U.S. equities or European real estate or whatever it is, right? So, and that's fine. I think it's a legitimate reason. So the uptick just hasn't been there from local investors. So who else is out there but international investors? So how do you entice them to come in, right? And honestly, they just haven't come in a big way. They just haven't. We haven't seen it. I would say in my 20 years, I haven't seen them come in a big way. We have not had a consistent, international LP base that consistently invests into these markets. It just has never developed.
Yeah. And it's interesting too. It's like to get the local LPs involved in the ecosystem, offering things like co-investment opportunities can work for some of the family offices that are investing in a similar space, deep tech or anything like that. And it's interesting. I just wanted to add to this because when you said that, it was really interesting about the PIF's role. They created Sinabel, right, which has sort of a mandate locally, sort of a mandate really anywhere. Their mandate is to make money, to have the highest return. Correct. But they do locally and they do internationally. But then you have JADA Fund of Funds, which is just focused on the local. And so it was kind of a cool way of doing it, saying, these are large funds. We're going to get
SVC.
And SVC, I think SVC is funded by Munshaat and
yes,
and that. But and then SVC is local focus, but they also have some regional interest. So they didn't just put all their eggs in one basket. And I think that was smart, like
Not
you
at
were
all.
saying. Yeah.
No,
Yeah.
it's very smart. And you mentioned Sanabel. Sanabel, I think, has been mandated as more than just an investor. And you're 100% right, by the way. Sanabel is not investing into funds as a sort of development company. They want to make money,
Yeah.
right? And actually, Sanabel has not invested in local funds. So what they've done in the local environment is they have set up an accelerator to help build the ecosystem from the bottom up. So they have a successful accelerator with 500 Global.
500, yeah.
They put through a lot of great entrepreneurs through that. It's a fantastic program. It's known as one of the best in the region at this stage. And again, that's a regional program, right? It's based in Saudi, but entrepreneurs get accepted across the region, and it's been a success, right? But now the question is, well, who takes it after that, right? Who's going to fund these companies once they come out of these accelerators? And you do have seed and you do have Series A funds. I don't know if we have enough yet, but that sort of part of the ecosystem is kind of there. But I think beyond that, it's slim pickings. To raise a $20 million round, just to put it into perspective, it is not easy. And that's 20 million. For us in the US, 20 million is a small Series A, right?
It doesn't make pitch books. Yeah.
Yeah, exactly. Or, I mean, it's actually, it might even be seed, right? Yeah. So, but and what that's done is you have a lack of lead investors, which I think you guys know lead investors are critical because I think there are plenty of followers. So once you have the lead, there are plenty of investors to follow, but you don't have that critical lead that says, okay, I'll take 50% of the round and let's go. And raising like that round can be super inefficient. You can have a cap table that's 50 people and you're only at the Series B. I mean, it can be that dramatic in some cases. So I think that's the real gap that needs to be filled. And that's a more difficult gap to fill because it's a larger one. You need bigger funds. And I just don't know if, sovereigns putting in $500 million, $1 billion to do this is the right strategy. I mean, you need investor appetite. And Lucian said it, right? It's too early in the ecosystem to say, well, do we have replicable returns? Are there enough returns out there? It's a bit early. We haven't had the exits that maybe we should. So it still needs support. And that's why I used the word fatal early on. The US, it's a blip on the screen. In a couple of years, we'll forget about all this. And, we'll come roaring back and you'll have great rounds and so on and so forth. I worry that in emerging markets and especially in the MENA region, that this is going to hurt. If we don't plug this gap and make sure that entrepreneurship continues and startups get funded, we might not have a story to tell in 10 years.
That'll leave a mark.
Right.
Sanabel and PIF, it's interest transition. I sent you an article, Amjad, from Crunchbase last month about Saudi investment in U.S. startups. And it just sort of spiked last year in 2022, up 40%, 32 funding deals, PIF, Sanabel, others are involved. This was over, between 2019 and 2021, only 14 deals. And this is the mandate for Sanabel and others. You got to go find returns. A lot of them are coming to the U.S.
Absolutely.
And do you have a take on that? Are they looking for specific types, or is this sort of across the board, things that are useful, they think are going to be useful to their transition?
So I think a couple of things. I think one is, the sovereign wealth funds being in the U.S. market is nothing new, right? I think it's new for venture. You probably rented from a sovereign wealth fund at some stage if you had a building in New York, but you didn't even realize it was the KIA or the QIA or, right? So they've been investing in real estate, equities, bonds, of course, and private equity. You know, I tell my VC friends, listen, private equity has been coming here for 20 years. This is nothing new. Like, you know, because they think they found the new fountain of capital. I said, guys, the private equity guys have been here for 20 years coming to the region. I mean, you know, Blackstone, Carlyle, KKR, they have great LPs from the region, and a lot of the sovereigns. So the U.S. market has always been a place that they feel very comfortable, right? Great laws, robust, great economy, lots of opportunities, great return. So I think that's going to continue. What's new is that I think they're going into more innovative, disruptive areas, right? Like venture, which is new, right? And that also coincided with venture itself growing, right? I mean, the biggest venture fund 10 years ago was $500 million, which for a sovereign wealth fund is like, no, thank you. I mean, it's too small, right? Yeah. Today, you have venture funds that are in the billions. So that also caught up to the sovereign wealth fund, ticket size. So I think that's what you're seeing is this collision of, okay, funds have gotten to a certain size that makes sense. The sovereign wealth funds have an even bigger interest now to go into venture and riskier assets. And I just saw a great statistic that said, if you look at the sovereign wealth funds today, the top three in the region, something like 25 to 30% of their portfolio now is alternative assets. I mean, that's high, right? These are sovereign wealth funds that used to invest in treasuries.
Yeah, I mean, their risk profile has been transformed.
It's dramatically. And my call is that in the next 10 years, we're going to see the rise of the sovereign wealth fund as an asset manager, and a GP effectively. So they're going to have amazing teams around the world. They're going to be cutting their own deals. So I think what's going to happen is they're going to reduce their GP relationships dramatically to those few that are very strategic and large. And they're going to do a lot of their direct investing with phenomenal talent and teams sitting in, all over the world, China and the US. And
you could see they're getting more sophisticated. Yeah, you can see it happening a little bit with Aramco's Wyatt. Yeah,
Mubadala. I would argue Mubadala today is, I don't want to say at par with some of the best GPs in the US, but the gap is closing. They want to buy Fortress Investments. They cut a deal with Apollo to do credit recently. So what you're seeing is the sovereigns now are saying, wait a minute, why should we just be a passive player, give our capital to someone else? We have talent internally. We're building talent internally. We can hire people who are willing to work for us now. The world has changed. We're the ones that have the most capital to spend and the most exciting deals. We're willing to be more aggressive. We're willing to pay. And I think you're seeing this kind of interesting transition into a more robust investor that's willing to cut deals and lead deals. We didn't see that before. And I think that's going to continue. And it's going to continue. I think it's going to get dramatic, actually. I think you're going to see them build real capabilities, whether through acquisitions, whether through internal talent acquisition. They're going to build real teams. And I think what they see is that, why not? We have the money. We know what to do. We can build the organizations. They're just becoming a little bit more confident, I think, about what they could execute.
I believe PIF has opened up offices in New York, London, Singapore, but they're aggressively staffing up the New York office, I think, as their initial foray into this model that you're talking about.
Absolutely. And Mubadala did it a long time ago, right? Mubadala set up a San Francisco office. And look, I think it's going to take time, right? They have to prove themselves. They have to entice companies to come to them for capital. I think they have to show that they're a value-add investor. So they still have to build their track record. but it's going to happen, right? I mean, you've been going to the region. I mean, hotels are full with startups and GPs with bags waiting for money, right? So, and I think they're realizing that, hey, this is not stupid money anymore. Like, this is smart money.
Yeah.
They expect a serious return. They want to cut deals that make sense for themselves. They're not willing to just to give you the bag of cash and say, charge me, 2.5 and 30 or whatever it is. I mean, I think that's going to continue to decline. They're going to be a partner rather than an investor. And they're kind of already there with the big players, right? I mean, they've been doing co-investment with the big guys for quite a bit of time. And I think that they've learned from that. They've learned that, hey, there's interesting returns out there in the private market, and why not? Why can't we do it?
Yeah. The PIF seems to be one step behind the Abu Dhabi model. Their New York office is equities mostly, but you can kind of see what's next. The issue, obviously, is, as you know, is going to be deal flow for these guys. Can they compete with the Sand Hill Road blue chip funds, with that track record with the network and everything like that? So it's
Lucian,
it's interesting.
You know what's interesting? I would argue that today is a great time for them to plug the hole, because growth capital has completely declined. And if you're someone looking for, a few $100 million to billion plus, where do you go today? And I mean, we just saw Mubadala close the Gitter deal, for example, in Turkey. They were already an investor, but they led that round $500 million at a dramatically lower valuation. But Mubadala led. They didn't wait for some other investor to lead. So I think we're going to see more of that, right? And especially for the tickets where their capital is super competitive, just purely because of size. I mean, where else do you go, right? But I agree with you. I think what they have to prove is, can you be value add? Is it just money, or is there more to this, right? And I think that takes building talent, building teams, doing the hard work, which from what I can see, it looks like they're willing to do that. And again, some of it could be purely through acquisitions, right? I mean, like Mubadala is trying to do. So we might end up seeing some really interesting mergers in the future. Who knows?
Well, you're a regular on the 966, so we would anticipate you be coming back to talk with us about these amazing things.
Well, I appreciate that. By the way, one interesting note is Mubadala has taken it a step further, right? With I believe that there was a release recently that they've actually creating an asset manager now, or was it ADQ? I think one of the two sovereigns in Abu Dhabi are actually creating an asset manager to sell product to investors. So now I think they're taking it even a step further and saying, well, we've already built this mechanism that we're making money from. Why don't we share it with others and make money off of it? So, right. So, why not? I mean, if you end up building a world-class access to deals and you have great teams, I could see that, maybe managing their money might become neutral at some stage where they're not paying any fees anymore because they're making enough revenues from third-party capital. Yeah, I mean, they're getting money from third-party capital and they're making returns. Absolutely. Yeah, I mean, can you imagine having access to Uber in its Series A, Series B, and you do a little pocket to your citizens? I mean, I would take it. Why not? I mean, there could be opportunities, I think, to say, look, we built this mechanism for the country. Why don't you guys share in that power, right? I think that would be brilliant if they could pull off, platforms where they can allow their citizens to participate in these great machines that they've built.
Yeah, I wanted to add to that too. I think it's interesting. I think what you said about these sovereigns competing with the sort of blue chip VCs and VCs that are all over, or PE funds even, is there's still a little bit of that stigma. Like there's still the Bloomberg article that comes out where it's like, oh, they're taking Saudi money. Here are the funds taking Saudi money. I think if things continue to trend in the way that they're trending now, that will become either much less of a factor or not a factor at all. But there's still a little bit of that. I mean, if you're the Uber and you have your choice, are you going to take the PR hit that might come with money from the Middle East region? And that's something that they may, get over sooner than later, but it's interesting.
It's a good point, but I think not all sovereigns are treated equally, right? I think, today Mubadala doesn't get that kind of press, right? Unfortunately, Saudi gets that press. Is it deserved? I don't know. I mean, probably not so much, but I think today, and you know how it is, political winds shift. 10 years from now, this might, Sanabil might be like Mubadala, nobody cares. But I hear you that I totally agree with you that today there's still sort of that, you're taking that money. But I would say the people who are serious don't really care. They're like, if I'm going to where the capital is, and if that's what it's going to take to build my company, I'm going to take that capital, right?
I'm interested that you ended at that point. I was laughing about Mohammed bin Salman talking about sports washing. He says, I don't really care if it adds 1% of my GDP. Terrific. And I feel,
by the way, I don't buy that sports washing thing. I mean, I think when you look at sports, if I looked at it purely as an investor, okay, like cold, investment in sports hasn't been lucrative. It's been hugely lucrative.
Well, on the 966, we sort of dispensed with that sports washing, argument a long time ago, because there's other reasons for you doing this. But I think to your point, I really do. It does seem to me, and look, we live in a world with our Sustic Review where like every 8th paragraph is, about Jamal Khashoggi. And that's the way it is. But it just seems to me serious people are well beyond those issues.
100%. I mean, I could tell you, I'm going to FII in a couple of weeks. Everyone's going to be there, right? So let's not kid ourselves here. I think those who are serious about large deals, that PIF is in the conversation. Bankers today. I mean, you would be not doing your job if you're going after a large deal and you didn't have PIF, Mubadala, QIA, KIA on top of your list to go visit, right? I mean, it would be silly. Sports to me is just one sector that they feel has great returns. It does have benefits to what I call the double bottom line, which is it helps me financially, but it also helps me strategically. Like sports in Saudi, I mean, for those who haven't visited Saudi, it's sports crazy. It's people love sports. So it makes a lot of sense to, bring sports to the country. It makes a lot of sense to participate in sports. And if I was, MBS and the Sovereign Wealth Fund, I would definitely invest in sports and do it heavily. And frankly, it's been a great investment for many, right? Qatar has done it. Abu Dhabi has done it. So, I think people who say that are looking at a very small piece rather than the entire piece. But the reality is that it's a strategic sector, like several others, that they're going to continue to invest in. And again, my call is we're going to see them disrupt not only this industry, but maybe other industries where you needed large amounts of capital. And I think bankers right now are literally trying to be super creative to think about things to pitch the sovereign wealth funds of the Gulf. And rightly so. I mean, they're willing to be more aggressive. They're willing to be more assertive in their approach to investing. And they're willing to disrupt industries that, you need a few billion to do so. And where better to go? I think we're going to see more of this.
Venture capitalist and seasoned investment professional with extensive experience in VC and private equity markets. Mr. Amjad Ahmed, thank you so much for joining us. Amjad, I will see you at the PIF, the FII. We'll have a cup of Saudi Coffee Company together or something. Awesome. Absolutely. Thanks so much for your time. This was
Thank
great.
you both. Thank you, Richard. Thank you, Lucian.